welcome. This is Market Wrap. I am Agam Vakil. Well, we've seen more weakness when it comes to not only the benchmark indices but the broader markets too, with the Nifty seeing losses of another 150 points and now well below the mark of 11,300, as you can see, and we've just had about 6 gainers of the Nifty 50 contributors, and whole India being, along with M&M being the only ones which have gained a little over 1%. We've seen deep gashes across, and something like a Titan or a Tata Steel, including ITC and Tata Motors, all well declining by over 3%. This is the same for Power Grid and Hero MotoCorp. Well, Tata Steel, along with some of the other metal companies, were actually resurgent, but that trend has also reversed, and now Tata Steel has lost out more than 4%. In the broader markets too, the picture is not very different. We have seen substantial weakness and more declines in comparison to advances. In fact, 4 declines for just one advance. And Power Finance Corp, Unitex, One Energy, Reliance Home Finance, and Max Financial, which was actually advancing in yesterday's day of trade, trading well above the mark of 500, has come off quite substantially today. Hathway Cables, Ajanta Pharma, NIT Technologies was the other one which was advancing yesterday and has well declined by over 6% in today's day of trade. And as you can see, a lot of these stocks have cuts of over 6% in today's day of trade. So that weakness is very evident in the kind of moves that we've seen. On the gaining end, just a handful of stocks which are advancing: Dredging Corp, Reddington India, Quality, and well, India Tourism Development to a certain extent. On the world, like I said, the declines are there for you to see, and it's very evident. But let's make sense of this and perhaps get us a perspective here. Let's get in our markets editor Neeraj Shah to tell us a little more about the kind of weakness that we see. Neeraj, how are you reading these moves now?
Anybody's guess, Agam. It is a difficult thing. I think today till noon it was looking weak but not so weak, or maybe it was looking wobbly but not so weak. I think Europe and the selling out there probably only exaggerated the selling on our markets. I think on the countdown show, Devina was pointing out that the Nifty Bank open interest position went up almost as high as 27-28% fresh shorts, and that happened. A large portion of that happened in a matter of the last 1.5 hours of trade. Nifty Bank resting at key support levels as well. So you don't quite know if the technical bounce out there or no, but you know, the currency continues to be under pressure. World markets are not exactly behaving all that well, and we are moving down irrespective of what's happening to the world market. So a lot of factors wrong, a lot of well-performing stocks starting to come off. The 2 pockets that you track so closely and which have been the support legs for the markets, which is one, IT, it's just starting to unravel a little bit. Today we saw the first pieces of that mid-cap IT and Tech Mahindra, etc. coming off, and we've already seen consumption come off. Titan, I was surprised, Agam, was at 819 today. That was the level that we saw the stock when the news about Rakesh Jhunjhunwala getting out of the stock came about.
Yes.
So a lot of weakness in some of the stronger pockets as well now. Well, let's see if this worsens, then who knows how much further.
Well, Neeraj, thank you for that perspective.
Thanks,
we continue to track what's going to drive these markets as we move into the next few days. But what are our technical analysts telling us about the Nifty? Well, a lot of analysts out there are of the opinion that there could be some more weakness in store. But since we were talking about the FMCG index, let me take you through what's actually driven the FMCG and consumption stocks in general downwards. And today we have seen a weakness in something like a Godrej Consumer. That's down and around at 1248. ITC is the other one which has once again come back below the mark of 300 and closed there. It was essentially ITC which needed to catch up with the rest of the FMCG players, but it really hasn't, and it's actually come back off to the levels that we saw earlier. We had seen a lot of strength in Tata Global Beverages just yesterday on the back of the restructuring news, and that once again has come off from the levels of 230. It's now around 216, so correction there as well. And of course, as you guys have heard of Neeraj too, and well, he has been talking about the weakness in Titan as well, back around the levels of 800. So we'll watch out for that. But that's not all. Let's get in Yatin Mota to talk to us about some updates in the metal sector as well. Yatin, what do you have for us?
Well, GSPL, that stock was in focus, Agam. The stock was quite strong despite the market conditions today, 3%, 3.5% on an intraday basis, what we saw in terms of gains coming in. Today, ICICI Securities has come out with a note which is basically dealing with the FY18 annual report analysis, in which they say that the kind of growth that the company has seen in FY18 in terms of the overall EBITDA per ton, it's quite encouraging. In fact, the EBITDA per ton in FY18 stood up at 10,567 rupees versus a level of 8,662 rupees per ton. So there is a substantial improvement there, despite the costs being higher. Also, we have the increasing utilization at their Raigarh plant, which has led to the increase in steel volumes. Also, the new Angul plant of 6 million tons per annum capacity is expected to hit a 90-95% capacity utilization rate, and probably that would be an earnings driver as well. Of course, they also recently concluded a QIP, and 40% of that was deployed in working capital requirements. So as the volumes for steel moves up, the working capital requirement also moves up for companies like GSPL, and probably the QIP proceeds have helped them to get their working capital moving. Of course, in terms of debt reduction, 2,300 crores is what we have seen in terms of debt reduction. However, there are two red flags which have been pointed out. Number one is the foreign currency loans, and because of the weaker rupee, that would have an impact on the overall financials. And number two, there has been an increased rate of related party transaction, especially with those especially those of with Jindal SAW, which is a probable promoter related company. It's a part of the same Jindal family. So those are the red flags. But clearly we have the stock which was quite active, and good news also is that the pellet prices are rising, which helps companies like GSPL.
Right, Yatin, thank you for joining us and giving us those updates. Watch out for that one as well. But weakness persists, and we continue to track whether or not we could see some recovery in the near term, or is there more weakness in store. That's a wrap on the markets, but lots more lined up. Stay tuned to Bloomberg Mint.